Hello everyone. In this video, we'll talk about few books to read before starting your investing journey. And before I start with the video, I must tell that there are plethora of books which are available in the market about how to invest in stock market and all. But then I feel these are the books which one should definitely try before investing in a stock market. And to begin with, we have first two books by the great portfolio manager Peter Lynch. I know Peter Lynch has a record of around giving CAGR returns of 29% for 13 years, and he managed this fund called Fidelity Magellan from 1977 to 1990. And there he had initially he had a record of giving returns north of 29% for these 13 years. And basically the theme of his two books is same, that one should know what he or she is investing, right? So, say for example, if I'm working in a particular, let's say in a automotive sector, then I should give preference, or I should do more and more research in that particular sector rather than dwelling on or venturing out in some other unrelated sector. So that is what he has mentioned in his book, that if I'm a doctor, then I should focus more on companies which are making drugs, or a company which are into pharmaceuticals or hospitals, rather than venturing into oil and gas and so on and so forth. So basically, I should define my own circle of competence, and then try to focus more in that particular area. So that was one of the key pointers in both of these books. And then there is also one thing which he has talked about, that for getting your best investment ideas, look around yourself. So basically what he says is that maybe you can go to a particular mall and then see that if there are any particular shops which is constantly being crowded, or you can go to a particular grocery store and see that if particular if people are buying things which belong to a particular brand or something. So that is how he has mentioned in the book, that he used to get his investment ideas when he was managing the huge portfolio. And then very important is that even if you have got that particular investment bet or something, but then it doesn't mean that you just go there and buy the share of that particular stock in the stock market. One should do his or her own research. So that is what he has mentioned throughout the book, that for getting your investment ideas, maybe you can look at your surroundings, but then that alone does not ensure that you are getting a good return or something. You should definitely do your own research. You should know how to read a balance sheet, how to see the profit and loss, how to make sense out of the numbers present in the profit and loss statement, and how to analyze the cash flows and all. So this is what basically these two books entirely talk about. The third book is Common Stocks and Uncommon Profits, and also I think I've also discussed in a few of my previous videos as well, that it is a written that this book was written way back in 1957, and second edition in 1959, and written by the great legendary investor called Philip Fisher. And Philip Fisher, as we know that he was more of a qualitative analyst rather than a quantitative analyst. And Warren Buffett, in one of his one of his AGMs, or maybe I think one of his in annual reports, he mentioned that way back in, and this is I'm talking about way back in 1969, that he is 85% Ben Graham and 15% Philip Fisher. And Warren Buffett has been greatly influenced by Philip Fisher. And basically, so this book talks about that, about the 15 points. It's basically a 15-point checklist of what to look for in a stock before investing in that particular stock. And maybe one of the key approaches to get more information about that particular company is by using a scuttlebutt approach. Now, scuttlebutt means that rather than depending on the Wall Street, or maybe the real this thing, one should ask questions from the main street. Now, what is Main Street? Main Street is basically defined by a company's customers, company's suppliers, company's competitors. So rather than depending upon what Wall Street says, because most of what Wall Street does is noise only. It doesn't add any value. So one should depend on the main street, or the actual street where the work is actually happening. So maybe one can ask questions from, as I mentioned, from companies, competitors, suppliers, and so on and so forth. And also he discussed, he has mentioned a lot about how wealth is created over a long period of time. And once you get particular stock where it satisfies his 15-point checklist, then one should not just sell it because he or she has got a good profit and all, and ensuring that if the story remains intact, then one should definitely look for a long-term holding, and which is how the wealth is created and has been done by all these legendary investors in the past. Also, one of the key pointers is that don't overstress diversification, as we have been told that, don't put all your eggs in one basket. But then Philip Fisher had a very contrarian view that one can definitely reduce his or her risk in investing by focusing only on companies which he or she understands better. And then if you can understand that particular company, and if you have confidence in the management of that company and the way the people are, the managers are allocating the capital and all, then you should only invest in such particular companies. And as we know that all these great companies are very rare in number, so rather than diversifying and buying 20, 30, 40 stocks, Philip Fisher had a tendency to only focus on companies that are satisfied his 15-point checklist. And then if he found that one or two stocks are there, then he will definitely put majority of his net worth in that particular stock. And this is what is called focused investing or concentrated investing, and that has been, I think, very much practiced by Warren Buffett and Charlie Munger. And in the last, he talks about the power of patience, and he says that if long if really huge profits are to be made, or if wealth is to be made over a period of time, one should have one should be very much patient about one should have patience about investing in stock market. So that was about the third book, which is Common Stocks and Uncommon Profits. Coming to the fourth one, which is The Outsiders. Again, a great book written by William Thorndike. And William Thorndike, basically, he has what he has done is he has listed down the capital allocation methodologies for, or capital allocation strategies adopted by eight of the greatest CEOs or greatest managers of all times. And he has a very he has defined very unique way that how value is created for shareholders over a long period of time by just focusing on capital allocation. And yeah, I think he has given a detailed view, so I'm not going to talk much about that. But then he has given a very detailed overview of how managers as capital allocators can create value for the shareholders over a long period of time, and how sensibly uh, or how rational the management is, or how he or she is allocating the capital to ensure that the value is created over a long period of time. So he has defined the entire roadmap of all the eight managers or eight greatest CEOs of all times, the policies that they have adopted during their tenure while managing the company and all. So I think it's again a great book by William Thorndike, which is The Outsider, and I think it is also recommended by Warren Buffett. So I think one should definitely read this. So coming to fifth book, which is Dhando Investor, I think written by so the book is written by Monish Pabrai, who is basically a hedge fund manager. And Monish Pabrai in his book Dhando Investor, he has written about how people. So basically, he has defined the term dhando, which basically means business endeavors that create wealth. And he has given few examples of how the Patels and Gujaratis, they when they migrated to when they came to US in 1970s with nothing in their pockets and all, and they didn't had any major wealth. So how they over a period of 30, 40 years, how they have amassed great fortune by focusing on focusing on bets that offered low risk, high return investments. And basically the point is that we have been often told that to get high returns, one should also be ready for high risk. And if I want if I am a risk averse investor, then I should not be looking more returns, because high risk and high returns go hand in hand. But then I think he has flipped this concept around by this Dhando framework that he talks about. And he says that these entrepreneurs or these Dhando entrepreneurs, they only invest in those bets where the where the risk downside is limited, and there is a huge potential for a capital appreciation. And he has given multiple examples that how these entrepreneurs participate in the bets where the odds are overwhelmingly in their favor. So I think again it's a very important read for investors. And then the sixth book is about intelligent. Sixth book is Intelligent Investor, and I think we have also discussed in few of my previous videos as well. Written by again father of value investing, Benjamin Graham. And again he talks about that how stock markets are they get irrational, and the pendulum swings between excessive optimism and excessive pessimism, and how a person or how a businessman can take advantage of this by calculating its intrinsic value and then buying it at a margin of safety. And also one of the key points of Ben Graham was that how one can limit downside before looking for capital appreciation. So basically all these value investors, they don't look for major capital appreciation. Their first agenda is, one should look at capping the downside, right? So rather than going for high returns, they ensure that the risk is either eliminated or it is minimal to the point. And I think this is one of the common traits across all the value investors. And there's a great quote by Warren Buffett that in stock markets you don't lose money, and that is the first rule. And second rule is don't forget rule number one. So rather than going for extraordinary or spectacular returns, one should ensure that he or she is not losing the money in the market. So that is what this point is all about. And then in the last, there's a very a great book written by Professor Ashwath Damodaran. So he's basically a professor of finance in Stern School of Business in NYU, and he has discussed how to value a particular stock belonging to any particular industry, be it in banking, financial sector, or be it in FMCG, or maybe any particular business. Let's say even in companies who are having a lot of R&D expenses and all. So basically, he has list down here. He has a list. He has given his criteria of how to value a particular stock. And basically, he has deployed two approaches. One is again absolute, which talks about the TCF method and all, and second is the relative valuation, which talks about how the market is pricing various stocks which belong to a particular sector. So I think this a book called Little Book of Valuation is again a must read, and one should definitely one can learn a lot about how to value a particular stock from this book. So I think I have listed down some, I think around some seven books. Yeah, so seven books I have listed down, and I feel that one should definitely at least read these books before allocating a huge chunk of your net worth into stock market. Because when you read these books, when you read about the greatest investors in the who have amassed a great huge fortune in his in throughout their lives. When you read about investors like Charlie Munger, Warren Buffett, Seth Klarman, Peter Lynch, Munish Pabrai, so we come to know about the thought process, that how they think, how they approach the stock market, right? And I think then this also helps us to shape our thought process. And rather than taking a bet, or rather than becoming a speculator, one should ensure that his or her thought process is aligned with the investment process, and then only he should invest in the stock market. So guys, that was for today. And if you feel, apart from the seven books that I've mentioned, if you feel like you have any other book in your mind which should definitely be a part of it, so please feel free to let me know in the comment section. And if you have any other queries regarding this particular video, maybe, again, you can put it down in the comment section. So that's all for today, guys. Thank you and have a nice day.